Can you be confident in the stock market? There are two schools of thought on this question. One is that the stock market is a decent investment, but it's a gamble that may or may not make money for you. The other is that the stock market is a reliable long-term investment that should be the core of your future financial planning. Most investors are scared of suffering a major loss, so they try to reduce the risk of their investments in one of three ways. Through asset allocation by holding some bonds and cash either separately or in balanced funds, by focusing on yield and investing for dividends or interest or own income funds, or by purchasing conservative equities and focusing on low volatility or stable, low-growth stocks. Of course, any of these conservative approaches to reducing risk are also likely to reduce your returns, but are they more reliable than the stock market? The key question is, if you invested 100% in the stock market and held it long-term, what are the odds that you would have strong growth over time? Let's assume you just broadly invest in good companies and ignore the three methods to reduce risk. The stock market is a mystery to most people, so looking at stock market history can provide some useful insight. Let's look at one-year stock market returns since 1871. You'll note it shows mostly gains, many of them large gains, and some large losses. Bottom line, one-year periods are unpredictable. How many years would you have to invest to get more predictable returns? The answer is 7 years. There have only been 5 7-year periods with losses, and they were small. 96% of 7-year periods were gains. How many years would you have had to invest to avoid losses entirely? The answer is 15 years. All 15-year periods were gains. Want to be sure of a strong investment gain? Invest for 25 years. All 25-year periods were strong gains, between 5% and 17% per year. Around 1930, the largest companies changed from mainly agricultural to industrial. Since 1930, the worst 25-year calendar period was a gain of 8% per year. Why is the stock market so reliable? It is made up of many large companies that constantly look for ways to grow their profits. Over time, their profits grow, so the value of the companies grow. When the economy is bad, they make adjustments to keep their profits growing. Bottom line, you can be confident in the stock market long-term.